Hello, welcome back. This is Joey, founder and creator at myatmm.com. First off, the disclaimer: this is not investment advice. This is for education and entertainment purposes only. This is a follow up, not really a follow up, but a continuation of the weekly review. Um, we had NVAX, and we needed to do a put for this upcoming week, and there wasn't enough capital in this account. So I'm moving over, in the process of moving over this portfolio over to Ameritrade. So I have Ameritrade opened over here. There's about 3K, I believe, of capital available to invest over here. So for NVAX, I wanted to go ahead and just go to NVAX, and over here we can see the chart and go to the Analyze tab. And this is where the option chain exists, and we're interested in this Friday, this upcoming Friday's options. And if this is the first time if you've ever seen ThinkOrSwim, it is quite a bit to digest all at once. I recommend you just take it a day at a time with this tool. It's a very, very, very powerful tool, but it is information overload for sure the first time you see it. The first few times you see it, it can be information overload, especially coming from or comparing to Robinhood. In any case, to keep us straight, we go to the website, the myatthemoneymachine.com's website, go to NVAX, and in here we can see what we're looking at. We do need to stick to just we're looking to do a put. So we own 300 shares. Is that right? Yeah, see, NVAX, we own 300 shares, but we're looking to do a put. So the last trading price was $16.53. So if we go back over to Ameritrade, the last price was $16.53. It says $16.51. It's around there. It's just the last time it took it. It could have traded lower in after hour market. Anyway, so an at the money put would be right at $16.50, and we can get $100 for that. It looks like actually the bid ask spread is 103 to 115. So in order to start up an order in NVAX, in ThinkOrSwim, what you do is this right side is the puts, as you can see here, and the left side is the calls. We're looking to sell a put. The bid column, when you hover over it, you can see a little tooltip come up that says sell, and if you hover over the ask, it's buy. So we're looking to sell a 1650 strike for this Friday. So all you have to do is just left click on this column, this cell right here, this 103 cell here, and then it'll move the proposed order down here. So here it just lists out exactly what we clicked on right here. I have mine set to do one contract at a time. I think by default ThinkOrSwim sets up to do 10 at a time, but you can change those defaults. In any case, so mine's set up to do a 1, and if yours not, you can just go down to set it to 1. The strike price is $16.50. It's a put because we clicked on the put side. The price is 103, but again, it says the bid-ask spread is 103 to 115, and there is a way to put the mark in here. I haven't done it yet. Maybe I'll do that at some point. But in any case, so 103 to 115, that's a 12-cent difference. So theoretically, the mark should be half that, which is, so what did I say? 3, that's 12, so halfway up is 6 cents. So theoretically, we should be able to get $1.09 out of this. So we can adjust that to $1.09 and try for that. So that's the price we're going for. And then what you do is you right click and you click confirm and send, and that'll pop up another little message. I did blur out the account information here. So the break even on this, so $1.09, I mean, that lowers our cost basis just on this one transaction down a whole dollar. So the break even is a dollar less than that, 16.50 if we did have to buy it at that. So the max profit's 109. I do like how it spells out some of this stuff. I know Robinhood gives you a risk graph and everything, and that's cool too. And Robinhood does not have the 65-cent transaction fee or this penny fee, but there's a lot of power in ThinkOrSwim, and especially gets really handy in the accounting side of things when you're looking to see what the execution price actually was, like when you're looking at like your transaction history. Ameritrade has far better tools than Robinhood. Makes tracking it a lot easier when you're like reconciling and going back to the myatm.com's web application, entering the transactions. Robinhood, I constantly had to basically sell and enter the initial order, and then you have to like wait a whole day to get the confirmation, and then you go back in and see what really happened. And what really happened is Robinhood takes like a penny or two off of every single transaction, so you have to go back and update everything to reconcile it, whereas with Ameritrade I can do that at the very first entry. Makes it very nice. So from a maintenance standpoint, 65 cents, the headaches and everything are far fewer as far as that side of everything is concerned. So in any case, this is just a confirmation dialogue we're going to sell this put. We're going to receive a credit of 109 minus their fees, which means we're going to get a credit of around 108.34. That is assuming that it goes for that 109, because we did go for the mark, which again was the middle between 103 and 115. Which theoretically you should be able to get, but sometimes you got to lower it a little bit less. Should almost definitely get more than 103. Should 104, 105, just a couple pennies up when the spread's that big. Almost always get that, especially on a highly traded stock like this. So in any case, it will bring our buying power down to the 1458. Like I said, we had about 3K of capital in this account. So we're going to go ahead and click send on this, and that will add the order. And as you can see, it does add a position to our accounts over here, a proposed position. The position quantity is 0 because it hasn't actually executed yet. So when it does, it will register over here and show you what it's doing. So that's a position that was entered. Another nice thing is when you're looking at this option chain, I really like this about ThinkOrSwim, how it shows you when you have a sell order or a buy order. It really becomes cool when you're rolling positions, because you'll actually have both icons. You'll have a sell and a buy. And also, it's very easy to see where in the option chain you do have ongoing orders. So, like, if I had if I sold an option way out here on March 17th, 2023, it would have that red sell icon. So it's very easy to pinpoint and see where you have an ongoing position in the option chain. Very nice to see that and focus on just this one stock at a time. It also groups some things that you'll see in the future videos that's really cool, that I like. Another thing that I really like about it is when something is in the money, it shows it to you in a different color, so you can see when an option is going to actually be at risk of being assigned at the end, or when it expires. So just really neat things. Like I said, it's a power tool for stock investing. So when you want to really harness and take control, it really allows you to do that. All right. So we have like 1,400 of stock capital left, and I do want to get involved in another stock, or rather go back to a stock that I was previously involved in, and I'll go ahead and navigate to that. It's not in this list because I haven't had any position in it in a while, so I got to remove the only positions filter, and it is TLRY, or TLRY. As you can see, my overall is positive with this, and it is one of the lower price stocks. But the reason why I like this one is it's a high volume option, high volume option trading. Sorry. In any case, all right, so we're going to be looking to get into this one, and if it's trading at 349, I like to get into these, classic wheel strategy, classic thing to do when you want to get into a stock in the wheel strategy. The starting point is always selling a cash secured put. And then only after you get into the position do you start writing covered calls on it. And I like actually continuing that at the same time. So if my cash secured put ever got assigned, I would then be in the position, and then I can write a covered call on those 100 contracts. But then I also, in addition to that, like to spin up another cash secured put right below it. So I'm playing both sides. So one of them will, execute every single time, and you're guaranteed to make a profit on one of the sides every single time. And if it stays in between the two strike prices, then you win on both of them. And if it keeps on going down, you just keep on pulling your cost basis down, which is a win-win, in my opinion. So that's the way I like to play it. So TLRY, let's go back over to ThinkOrSwim. And, coming back to this after being away from it for a while, I don't know. I'll probably start off maybe with just one contract. I may do two. I don't know yet. Let's just see what premiums it's giving. I do sometimes just like starting at the chart just to see what it's been doing over the past history, just to kind of get a ballpark idea. So there's some huge candles here just, about a couple months ago. So it's could be considered an uptrend, but this has been pulling back quite a bit recently, so it could be reversing. And it looks like it did break through these averages, so it could be starting a new downtrend, which if that is the case, that means selling these cash secured puts should fire, and we should get into the position, which some people don't like that. They sell cash secured puts not wanting to get into the stock, and there's just different opinions about that all across the board. I don't like to speculate too much on this. I just like to find a good stock that has good premiums, that has good volume, that the cash flow is there on both sides, the puts and the calls, because of the way I trade them. So let's go to analyze so we can see the option chain. And again, we're focused on weekly, so I just want to look at this first week. I may look at the second week just to see if the premiums are still there in future weeks. I do sometimes like to look at that, especially because you can tell that this is a normal monthly option, December 16th is, and these other ones in yellow that say weeklies, these are the actual weeklies options. So sometimes the normal monthly ones are treated differently sometimes in when they're calculating the premium available. So let's just expand this one. And since we're working with close to at the money because we're not in this position yet, we can actually trim these strikes down to just the first. And actually, let's go into, so the in the money 3 and out of the money 3 on both sides. And let's look at both this upcoming Friday and the following Friday, just so we can kind of get a gauge of future premiums. And since we got enough screen real estate, let's go and do 3. All right, so like I said, we like to do puts, cash secured puts to get involved in a trade. So here's something to look at. And something else that I like to look at that I never looked at in Robinhood because it didn't really have it easily in a spot where you wanted it. If you know how options work, they got these premiums, but it doesn't really say what portion of that is actually time decay and what portion of it is just value. And that's where I like this because it has the extrinsic value. So the true value, see, it's so 22 cents of this is the time, really, and the other part is the value, which makes sense because if you look at it, this is a 350 strike and the last traded price is 348. So the only true value there is 2 cents. So the other 22 cents, which is what extrinsic value is telling you, is all time value. So from the 6th to the 16th, there's 22 cents of time value here, as opposed to this $3 strike, which, so normally, since it's trading at 348, normally I would be targeting a $3 put. That's normally what I would be doing. But its extrinsic value, well, is only the 4 cents. So I mean, this is all extrinsic, which it should be when it's out of the money like this. All that should be there is extrinsic. There is no intrinsic value because it's not in the money. So I have to debate, do I want to try to start up a position just for a nickel for that, or would I rather go ahead and get this higher extrinsic? I'll tell you right now, since I'm a cash flow investor in these calls, covered calls and cash secured puts, I normally like to go for the highest extrinsic value I can because I'm trying to go for selling time, not really focus so much on the value. I focus on the value as far as covered calls are concerned to make sure I'm not losing capital. But when I'm getting into a position, I'm more focused on the time, the extrinsic value. So this is 2 cents in the money, but it's giving me 22 cents of free money, so to speak. So would I do this? I would not. I don't think I'm going to do this 4 cents because that's just not a lot of money. But you can see if I own the stock, I could sell a covered call at around the 22. Same. See, there's extrinsic value of 23 here. So on the call side, there's 23. On the put side, there's 22, just to be 2 pennies in the money. So I really think I'm more leaning towards this one. And I'm thinking about doing 2 contracts. So that would be collateral of $700 because 350 times 100 and then 2 contracts. So that would be $700 collateral. And I think I feel comfortable doing that. So, I mean, if it stays below 350, then we will get assigned and buy it. But we're already 24 cents into it. So the break even is actually what, 326? Yeah, it'd be 326 a share. So, I mean, it could drop all the way down to 326 and we'd still break even technically if we were just to turn around and sell the stock again, which we won't do because we're cash flow investors, or I am rather. So, yeah, let's go ahead and do that. So what I'm going to do is I'm going to prep an order by clicking again this bid because we want to sell a cash secured put. And something else to look at before I do that, notice how the same strike price, but 2 Fridays out instead of 1 Friday out. Notice how the extrinsic value only jumped up, what, 7 cents? This one's 22 cents and this one's 29. So it only jumped up, I mean, 6.5 if you want to be very technical, but basically it only jumped up 7 cents for an additional week. So that's why I like focusing, again, also on weekly options. So I'm getting 22 cents, which is the lion's share of that time value that's there. The funny thing about it is if it stayed around the same price, it may or may not. I mean, that's theoretically saying that this 29 cent extrinsic may only drop 7 cents before it gets to a week, only it still went through 5 full days. So that's why I like focusing on the weeklies, because you get the biggest bang for your buck and the maximum cash flow you can. And again, so you see 22, 29, and then only 34. So it's getting lower and lower. So this jumped up 7 cents, but this only jumped up 5 cents. So it's getting lower each time you go a week out. So the majority of it is reserved for near expiration, which is why I like focusing on weeklies. All right. And it's this level of detail that you just don't get in Robinhood. This level of detail you can really expand on and analyze and theorize using this tool instead. All right, so let's get back to what we're meaning to do. And I think we're close to the end. I think this is the last thing I'm going to do. So we got 24 cents, and the spread is what, 24.25. So that's only a penny spread, so we're not going to get more than that for sure. So 24, and I do want to do 2 contracts. And the funny thing about TOS is or ThinkOrSwim, also referred to as TOS, TOS, plus will negate that, so you want to do minus to get 2 contracts because we're shorting it. We're selling 2 contracts. We're not buying 2 contracts. That's why it's negative. Selling is negative. All right. So we want to right click, do confirm and send, and this will give us our confirmation screen. So we would be receiving $48 in credit. It does charge 65 cents per contract, so that is taken out. The buying power is 650. Okay. The collateral is actually 700, but it goes ahead and factors in the fact that we're getting paid premium. So it's so basically it makes sense if you think about it. It's $700 collateral, which is true, but you're getting to $48. Well, you're getting to $46.68. So $46.68 is immediately, when this transaction executes, is immediately added to your buying power. Because so basically, if you take it to $46.68 plus this $653.30, it will be at or really close to the $700 collateral that we're in on this trade. So in any case, that's what it's doing. It's still $700 collateral in actuality, but it's only decreasing the buying power effect by 653 because it's adding the 46.68 in the same transaction. All right, so we're going to go ahead and send that, and then that one's placed, and as you can see, the position was added over here. Again, it's 0 because it hasn't executed yet for the quantity. And yeah, that's that. So we now have the NVAX put, and we have 2 new cash secured put contracts in on TLRY. And the rest of the buying power, I think I got like about $800 left. I'm just going to let that sit for now because, like I said, I'm in the middle of transitioning money over to the portfolio, so having a little extra around for something that may come up that I need to do makes sense to me at this point in time until I get all of it transferred over. And that 1,000 that's left in Robinhood, I'll probably go ahead and not let set, but probably just go ahead and transfer it. I will I will miss the 3.75% interest that Robinhood is paying on the brokerage cash that's just sitting there. I mean, that's kind of nice to have that high interest, but in the grand scheme of things, we should be making a lot more than that when it's working in this cash secured put covered call selling strategy. Should be making a lot more than that. So it's not that big of a deal. But in any case, hope you enjoyed this video, got something out of it. After tomorrow when the market opens and the positions execute, we will adjust as needed to see which ones did not fire and see what we can do to adjust them to get them to execute. And then I'll create that follow-up video. Other than that, everybody have a good day. I'll see you in the next one.